Hello traders, welcome back to the WillssFX YouTube channel. Today I'm going to talk about a topic which I've actually done quite a lot on the channel, and I'm going to go over how to trade Forex with £10. Today I'm actually going to talk about how you can use this £10 to grow it into an account which you can actually make some decent profits from. Obviously you can't expect to make, thousands of thousands or even tens of thousands every single trade from using a £10 account. If you want to actually build up to that sort of level, it's going to take weeks, months, even years. And obviously there is nothing wrong with actually only having £10, but I'd say firstly, before you actually start trading with that £10, you'll have to go with an unregulated broker that offers a 1 to 500 leverage, because if you have a 1 to 30 leverage, you won't be able to enter any trades at all. So your money won't really be protected by the FCA if you're in the UK. And yeah, your capital will be at risk. Also, what I'd actually say is the best way to actually go about trading with a small amount of money is to just find a job, have a different income to build up your trading account, and maybe start with £250 to £500 in the account, because then you can actually use risk management. You can't really risk manage on a £10 account. Because let's say, for an example, the average trader uses a 30 pip stop loss. With the smallest lot size available on most MT4 brokers, you're going to be risking 10 pence per pip. So 0.01 risks around 10 pence per pip depending on the pair. And with this 30 pip stop loss, you're going to be risking around £3 on each trade. And if you do the maths there, 3 to 4 trades ish, depending on the pair obviously, and your account will be gone. So it's very imperative that the first few trades do actually go well. And that's why I wouldn't say if you only have £10 to put it into a trading account and grow it, because if you're in that sort of situation, then you should probably use that money elsewhere instead of just putting it into a trading account. And you're going to have to be risking around 30%, 25-30% per trade on this account. And obviously everything you've been taught about risk management, if you've done research on Forex before, tells you not to actually do this. That is the only way you can actually go about trading with this small account. I think when I was trading my £10 account, when I used to start, and you've probably seen the video series for that, I think I was using 0.01s. And then when the account size got to around 25 to £30, I might move it up to a 0.02. But what I see most people actually make the mistake of is just going in, risking the whole account on the first trade. Then they wonder why they blow so many accounts. You're not giving the account a chance to grow. Because let's say you lose one trade, you're down £3, but then you win one trade. And if your risk reward is actually good, maybe a 1 to 3, 1 to 4 minimum, then the account's doubling in that one trade, even after you've had that loss. So with these first trades on the account, you do actually have to kind of win them, because you only have like 3 or 4 chances before the account's gone. I know it's easy to say just win the first trades, because no one really knows if the trade's going to win or lose. It's at the end of the day, it is a 50-50. And I know it is a higher percentage if you do have, profitable strategy, you've done the testing. But yeah, you still could have a losing streak in the markets and you could lose the account even if you are a pro trader. And with growing the lot sizes, what I personally do is start with a set lot size for the account. So what I'd start with is a 0.01, which is the smallest one you can do, as I mentioned, so risking 10 pence per pip, and then slowly build that up as the account grows. I wouldn't go crazy. I'd still risk the same amount of the account, because if you've managed to grow it from the £10 by risking that certain percentage, having that set risk to reward, having that set loss limit per day, then you can do it if the account's bigger. And if you can manage that £10 and put it to £100, you're loving life. And maybe you could move to a 0.04, 0.05 lot size and risk obviously a decent amount of that £100 account. But you wouldn't want to be risking around £30 per trade, because obviously again that's 30% per trade. And people wonder why they blow their accounts, and like I said, they just go in either with the highest lot size at the start, or they'll grow it up slowly, get greedy, place a bigger lot size. Oh no, that trade's a loss. Then they're back to square one again. They've either blown the account or they're back to £10 again, having to start it all over and over and over again. But the issue is with this one, although they haven't actually lost the profit, they've seen that profit. So now they feel like they should get that profit back. So what do? They place on a bigger lot size to make that profit back, and then they start revenge trading and risking too much on each single trade. And I'd say the best way to actually grow the account is to trade lower volatility pairs. So I wouldn't go straight in with like gold, US 30, maybe GJ. These pairs move quite a lot of pips per session. I'd maybe start with, EU has tight spreads, so you could do quite well with a small account, and there's less movement and less volatility than, let's say, US 30 or gold. And also with these lower volatility pairs, personally I found I can get tighter stop losses. On gold I use around 20-25 pip stop losses. But on these Forex pairs, on these low spread and low volatility forex pairs, I can get around 5 pip stop loss, 10 pip stop losses into some scenarios. Obviously, there are some trades where you have a higher stop loss, maybe 20 pips, but obviously I aim for a lower stop loss to get that perfect risk to reward. And don't try and be like these SMC institutional traders that use a one pip stop loss or a half a pip stop loss. It's just not possible because of spread. Most brokers don't have raw spread, so you can't have a 1 pip stop loss or a 2 pip stop loss. You're going to be out of that trade as soon as you've entered it. And also, one of the main things I actually didn't do when I was starting with this smaller amount is actually take profits from the market or take profits from the account I'm actually trading. So what I do is I just keep growing the account, growing it until it was hopefully a big account. But what I should have done is every week or every month, take a percentage of those profits and put it into my bank account, withdraw it, either invest it elsewhere, save it in my bank account. Because at the end of the day, if the money is still in the account, it's always at risk, because every trade you enter is risking that money which is in the account. But if, let's say, you get the account to £200, so £10 to 200, and you don't withdraw any, what's the point? Because what I personally do is maybe I withdraw £25, because now, worst case scenario, if that £175 which is left blows, it doesn't matter. I've made £15 from that £10 deposit. There's a 150% gain on the account, even if the account blows now. And that's also what I do with a lot of my even higher amount flips. Take out the original deposit plus a little bit extra. So if worst case scenario happens, let's say you forget to set stop loss, the trade loses, the account blows, you're still ending up with profit overall. And that's obviously always the goal with trading. The worst case scenario being you make money. That is obviously a very nice situation. The way I do this is maybe, let's say you've ended the month with 20% profit. As an example, maybe you could withdraw 5% of the profits made or 10% of the profits made, or even if you have to pay bills, because I know a lot of people want to trade for a living and have it as their only source of income, then you can do this and you will have to withdraw every single month to actually pay your bills. Because as you know, if you're trading a small account, if you're watching this video, you obviously want to trade with a smaller account. You just got to realize that if you're risking a large amount, like a high percentage, maybe 50% of the account per trade, then you can lose it very, very quickly. You could probably lose it 5-10 minutes on gold, probably even less, because people just try and trade news of it as well, which is obviously, if you traded news before, you know that is literally a recipe for disaster. Lastly, I'd say be sensible and realistic with your expectations of the £10 account. You probably see traders on Instagram, traders on YouTube making tens of thousands, hundreds of thousands of pounds profit in their accounts. But what you don't realize is a lot of these traders, and even myself, I've been trading around 3 years now, and a lot of these traders have been trading 5, 10, 15 years to actually get to that stage of where they're making £10,000, £20,000 per trade. If you're a new trader, you've got to kind of tell yourself that that's not going to be me next week. From this £10, I'm not going to suddenly become a millionaire. You've got to be realistic and not get disheartened when you don't see the profits that other traders are actually making. Everyone's in a different situation, and if you've only got £10 to put in the account, you can't expect the same results as someone with a £1 million account. It's just not really going to happen. And obviously there are endless possibilities for this £10 account. I think I did a £10 to £1,000 flip, and then £1,000 to £10,000. You've probably seen that on the channel. I did a £10 to £340. I think that's in like 2 or 3 days. Did a flip video on that. But obviously, overall, I'd say it is always better to risk manage. It's always better to not flip the account. It's always better to put the time in. Maybe work an extra job so you can fund your own Forex account. Or even just get Forex funded. Get funded on your trading account, use that funded income to fund your personal account, then you won't have to trade with £10. You can get a funded account for around £130, £140. They give you a £10,000 account, and if you have the skill set, you'll be able to make a serious amount of money from this funded account. Maybe 10 years ago you were limited and you had to have the capital to trade, but now there's so many prop firms out there and investors that will give you the money if you can show consistent returns over time. I'd say definitely better to build up the account size over time, because people say to me in my comments, why aren't you trading a £2 million account, funded account? Well, why would I do that when what I personally am doing in my Forex trading journey is building it up slowly? There's no point going from, let's say, £50,000 account or £100,000 account to then 2 million. A 10% win on a £2 million account is £200,000. That's bigger than most funded accounts out there on one win. And also, let's say you have 5% in a losing streak. I don't know if my trading psychology is ready to see minus £500,000, if you see what I'm saying, or something of that sort. And it is a journey. A lot of the traders that are actually watching these videos are young. They're 18 to like 25 years old, and that is very, very young. You see most of these elite traders out there that are doing it for the institutions, they're like 30, 40, 50. It takes years of experience to actually build up the capital, the knowledge, the experience in the markets to actually be able to handle these large sums of money, handle the drawdown, the losing periods, and even the winning periods, because sometimes the winning streaks can be harder to deal with than the losing streaks. You get complacent, you get overconfident with the trades you're taking, you start over risking, you start taking trades you wouldn't normally take because you kind of feel like you can't lose. And it's obviously not really a good situation to be in when you think you're better than the markets, because sooner rather than later you'll be humbled, the markets will destroy you, and then you'll be back to square one again thinking, how did that happen? How did I let myself go to that sort of level where I actually did make these mistakes? Obviously this does come with time, everyone makes mistakes, I make mistakes in my trading. And that is why the use of the journal is very, very effective. You can evaluate on the mistakes. You can see, okay, I went wrong here. I didn't go wrong here. And you can improve from that. And this is again with the £10 account, you can do this too. You can see, okay, let's say you blew your £10 account. If you go back on that account history, you can see the loss size. Why were my losses over half of the account balance? And if this is the case, well, it's obvious you're going to blow the account. 2 losses, the account's gone. And if you don't have a good risk to reward and a high win rate, the account's going to go sooner rather than later. Then you can maybe learn from this to start maybe risking 5% of the account, 10% of the account, or just lower it until you manage to actually work with your strategy, your win rate, your risk to reward, your profitability on each trade. And once you've mastered this, it does become a lot easier in the markets, and you start realizing, okay, so this is realistic profit target for me to make this month. I aim for around 10 to 15% profit per month. And that is obviously using riskier setups on gold, but I'd say any trader making 5% per month is very, very good going. Let's say your money in the bank, it's not going to make 5% in a year, let alone 5% in a month. The top index funds don't make 5% in a month. They could do in an odd month, but over the course of the year, they won't make that much per month every single month. So 5% is a very, very good month in trading. 10% obviously a very, very good month. And if you're over 20% in a month, then that is very, very good going. But not if you're an SMC trader, then it's not good going, because you should be catching 200% per trade as they portray on their Instagrams. I hope you guys did enjoy this little video on how to trade with smaller accounts, how to grow that £10 to maybe an account in the future that could be in the millions if you put the work in over the years. But yeah, I hope you guys did enjoy, and I'll see you guys